Hey everyone, so inflation is upon us. Possibly, maybe, who knows. We'll have to see what the Fed does. We'll have to see what the Biden administration is about to do in the States. But, of course, if the United States gets hit with inflation, of course, Canada is also going to be getting hit with something that's not very good either. So, of course, us as Canadians have to watch the Americans, but at the same time, if you're American or Canadian, these are some stocks that you could invest in if you wanted to benefit from this inflation that may be happening. The first stock I'm going to be looking at is Caterpillar, CAT on the stock market. Now you're probably wondering, why am I talking about this one? You would think that this would get destroyed by inflation. However, this is my theory on why it will not. First off, it pays a dividend. It pays a dividend, so people are going to be absolutely loving the stock while inflation's going on. However, because of the Biden administration, he wants to invest trillions into the economy, into roads, highways, buildings, different types of infrastructure when it comes to solar and basically renewable energy. And guess what? Caterpillar is the one who sells the trucks, the bulldozers, the things that will allow these big companies to work and use those trillions and trillions of dollars to their advantage. So, because of that, I think Caterpillar is going to have fantastic earnings. Of course, if all of this trillions of dollars goes into different companies that will then buy things from Caterpillar. Of course, Caterpillar has a 3 million share average volume on the stock market, currently trades at a 35 PE ratio, which is not bad when it comes to this type of stock. We've also seen from the 5-year chart that, of course, there's a lot of people also thinking the exact same thing. And that is, when everything opens back up, and of course, when this stimulus gets into the economy and different companies who need to then build roads, it's going to be absolutely fantastic. It's had a little bit of a pullback recently, so it may be possibly a good time to buy this stock. We've also seen that 2020 was not a fantastic year for them when it comes to earnings or revenue. However, they have been beating their quarterly results every single time over the past 4 quarters. So this just tells us that this is a company that is set up okay for the future, of course, minus 2020, but who would have thought that they would do any good in 2020 anyways? Next is GLD, the Spider Gold Shares. Now this is an ETF, and of course the MER on this is quite high when you really think about it, because all it does is hold essentially gold. Of course, it's trading the futures, but 0.4% on GLD. Is it just better off holding gold and physical gold that you can buy from the bank? Possibly. That might be a better option. However, it depends on how long you're thinking of holding this. Of course, the average share volume is over 8 million shares traded per day at $175 per share. So you're looking at some easy liquidity when it comes to this versus a gold bar that you would have to either make an appointment at the bank to sell or go to a random pawn shop to pawn off. I would definitely recommend going to a bank to sell your gold. If you have like bank gold, essentially the gold that's been minted by your country's mint, then that would be the better option. However, if you're looking for a short term, of course, GLD is a good way to go too. And it does trade along with the price of gold, so of course we're starting to see a little bit of a pullback, but if you really zoom into here, this is actually quite concerning in my opinion. So it was on a trajectory down, and then it's broken past that downwards trend line, and then now it did bounce off of that resistance that it has there. So from at that point, if it does break past 180, it's quite interesting to me if it'll actually hit 190 again and continue to go. This may be a telling sign of what's going to happen in the future potentially. And there's also ways of investing in gold without having to have a solid piece of gold or GLD. You can invest in companies like Barrick Gold, ABX on the stock market, .to if you're Canadian. And from there, if you look at the yield, you're at almost 4%, which is fantastic. Of course, the price of gold has gone up substantially over the past year, and companies like Barrick Gold, who mine gold, are going to be definitely doing very well. I remember I was looking at this company years and years and years ago, and I think they were in that $15 range. I kind of wish I did invest in them, especially now that they have a 4% dividend rate on that price. And of course, the average share volume is 4.3 million shares, so you're easily able to get in and out, and PE ratio is actually quite low, in my opinion, versus other gold miners that I've actually looked at recently. Because of making this video, I've been looking at a couple of gold miners. And of course, they do also trade pretty well in line with gold. However, at the same time, gold didn't drop that far. But at the same time, if there is inflation and the gold price goes up, I would definitely be thinking that it could hit that $35 to $40 mark once again. Plus, you're getting a dividend until that happens. I think it's a pretty good trade. And as we can see here, exactly what I was saying, 2020, price of gold went up, they make more money. It's pretty simple. 2018, price of gold was garbage, they don't make money. So as long as gold is going up in price, their earnings are going to go up, which means their dividends go up as well. And we can see that they make some pretty killer numbers when it comes to the dividend. Like, check out some of these dividends that they were giving out in 2019. Absolutely phenomenal. And if those can happen again, now if that can happen with the price that it was at in 2019, and we start looking forwards into 2020 and 2021, and if price of gold continues to go higher, we're going to see better and better dividends in the near future. Now, of course, this is all because of inflation. If inflation doesn't hit, this trade doesn't work out as well. However, at the same time, that Caterpillar trade may still work out okay, mainly because the government's already spent a lot of millions, billions, trillions of dollars into infrastructure already. And what I've been reading is that Biden wants to add even more money to that pile. If that happens, that's still a good, solid trade for the future. The gold trade, it would be kind of iffy if inflation never hit. Now, of course, now we have to move over to digital gold. And what I'm talking about here is Bitcoin. Bitcoin looks like a pretty good hedge on inflation, and you can trade that with a few different ways, but one way you can is by investing into Galaxy Digital Holdings. GLXY is the ticker. And if their average volume right now is 1.1 million shares traded on average every single day. Their PE ratio is 6.22 with no dividend. Now, they have not been on the stock market for very long. They have gone up with the price of Bitcoin. Of course, they do hold a lot of things when it comes to Bitcoin and different digital currencies. So, of course, this dip may be a good sign to buy, but at the same time, it really comes down to how risky your portfolio wants to be, or you want your portfolio to be. Because even though I do have a very, very, very small portion of Bitcoin through a couple of different ETFs and things like that, I still count it as a casino stock trade, which means that it's still a casino stock in my view. Now, of course, some of my friends think that the Bitcoin is the be-all, end-all of investing. While for myself, I still say it's a bit risky, but you have to have a portion of your portfolio in risk. You have to. Another way is Grayscale Bitcoin Trust, BTC, on the stock market. And of course, this has massive, massive volume at 9.6 million shares traded every single day on average. It's ridiculous. It's been on the stock market for a few years. We also see that it's had that same pullback as Bitcoin. Now, this one just holds Bitcoin, but of course, this ramp up is nice. If it can bounce off this mark, that means that this level of resistance is still there, which then tells me that it could go higher. So that's actually a good sign to me right there. If it can bounce off that $30 mark, then I think that you're doing pretty good. And then, of course, if you want to invest it as a stock in the United States, another good way is Coinbase. Coin is their ticker symbol, COIN. And of course, 10.2 million shares traded on average every single day is a very enticing way to invest into it. Now, they did come on the stock market not very long ago, only I think around a month or so ago, and they have been trending downwards, but this is really no surprise because the price of Bitcoin's been going down and the price of other digital currencies have been going down. But if they continue to go higher, Coinbase, of course, will make more money. The other thing with Coinbase is, of course, if these Bitcoins, Ethereum, and all of these other digital currencies start becoming more mainstream, Coinbase is one of the biggest platforms that you can use for those digital currencies. And when we start seeing these South American countries starting to accept Bitcoin as an actual legal currency, you may actually start seeing more and more countries doing that, especially those that don't really have their own currency or at least a strong currency. That may be a very good sign for just the currency in general anyways. I also get kind of scared when I start seeing these countries saying, hey, Bitcoin is now our legal currency. The reason why I'm saying it's kind of scary is because if that was to happen here in Canada, for example, and let's say we stopped accepting regular Canadian currency as the legal currency and we had to transfer it into Bitcoin, well, guess what? One Bitcoin, let's say they just wanted to do that whole route and say, well, now because a coffee is like $2.50, well, now it's going to cost you potentially 2.5 Bitcoin, which would then be 150,000 Canadian dollars. That's, of course, if inflation gets all screwed up and things like that. That's starting to kind of look scary if you really think about it. So even though that will probably never happen, there is that 0.0000001% chance of happening, and if it does, then that's kind of scary. And of course, there's the chip trade. The chip trade is going to happen no matter what. Depends on what's going on in the United States with how many companies are going to want to produce chips in the United States. But with this big chip shortage, this is a good stock to buy anyways. But now with inflation or potential inflation, I think the chip trade's just going to be even better because Nvidia can charge even more money for their chips. It's a physical commodity. It's actually basically become a commodity in a sense. Because of the scarcity of graphics cards, because of the scarcity of chips in general, because every single thing needs to have a chip today, it's almost like gold in a way, where gold could be used as money. Chips could essentially be used as money as well in a way, because think about it. A pickup truck now needs to have multiple chips. My Ford Mustang probably has at least 50 to 100 microprocessors in it. My Escape that's older probably has already 20 to 30 back then. And there's more and more cars are being produced, more and more electronic cars are being produced, the computers, anything. Everything takes a chip today. Even a toaster will take a computer chip because now there's toasters that use your phone to be able to toast bread. Like, here's the bread. I want it this kind of darkness. What? So now, just with everything running a chip, more watches are using chips, just everything in general. I think that any chip company is going to be a good way to go. They do have a very, very small forward dividend. I wouldn't even look at that as a potential way to invest in this company, other than it just being a nice little bonus once in a while. Average volume is crazy. PE ratio is 84, which is extremely high, but actually not really that bad when you start looking at the potential of microprocessors and chips. That it should be, in my opinion, trading closer to the whole Tesla PE ratio for how much Tesla is wanted versus how much Nvidia chips are wanted. And of course, they've gone up ridiculous when it comes to their stock price, mainly because, as we all know, everything is using chips these days. It's going to be even more than it has been in the past. There was this massive run-up. There was consolidation. Now it's starting to run again. Who knows where it's going to go, but it's just quite interesting to me. They have also been outperforming on the quarterly earnings, and of course 2020 was a ridiculously crazy year. I mean, 2021 was a ridiculously crazy year. Like, you're going from doing maybe 11 billion up to 17, close to 17 billion dollars worth of revenue. That is absolutely ridiculous. I hope that this video helps you make some trading decisions, ideas, or something. Remember, I'm a random YouTuber. Never trust a random YouTuber. Do your own research. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I will see you guys again next time.